Today on BRR, I'm joined by the Executive Director of Cromwell Property Group, Mr. Paul Weightman. Paul, thanks for joining us again.
Thanks, Skye.
Now, Paul, can I get you to start by giving us an overview of the Cromwell Quarterly Market View?
Yes, Skye, look, the way we see the market at the moment is that property fundamentals are still relatively soft and likely to get softer. We're in an environment in which the economy is slowing. We're not seeing much growth in white-collar employment. And generally, that's trickling down to demand, and it's leading us to a position where we're seeing very little growth, either in rentals or tenancy demand, across most markets over the next 1 to 2 years. That's compounded in some markets, such as Brisbane, by the fact that we've got cutbacks in the government sector and reductions in demand in the resources sector. And all in all, it's pointing to a relatively soft period for rentals and tenant demand.
So what are you seeing in respect to property prices?
Well, this is the curious thing that despite the fact that we've got a relatively soft demand side of the equation, we're seeing global pressure for yields and for cash flow driving prices higher. Now, this is likely to become more acute in the short to medium term because Australian interest rates and Australian yields are still substantially higher than what we're seeing elsewhere in the world.
Okay, so you've recently been presenting at a number of conferences and have been on the road. What are some of the feedback you've been receiving from investors?
Look, I think you can summarise the demands from investors at the moment in 3 words, and that's yield, yield, yield. They are all chasing cash returns, and we can see that not only in the equities market and in the REIT market, but we're starting to see that filter through into the direct property market as well. There's very solid demand at the core prime end of the market. That's starting to filter down, and I think a lot of investors that wanted to get set in the core part of the market are now looking elsewhere. So we expect this demand from investors for good solid cash flow not only to continue to drive equities and REIT prices, but also start to drive prices more widely in the direct property sector.
Okay, and in your opinion, Paul, what are some of the upcoming opportunities looking forward?
Well, Skye, I think there's still opportunity in that mid part of the market. You know, we've seen some very, very aggressive buying, and we continue to see aggressive positions taken at the core end of the market. In fringe assets that might be described as secondary, but which still demonstrate very strong cash flow characteristics, the market's still fundamentally mispriced. So we've got up to a 200 to 300 point margin between prime assets and secondary assets. We think this is the part of the market where there are still opportunities on the buy side, and we think that we'll see more relative cap rate compression in that part of the market than we'll see on the prime side in the short to medium term.
Well, Paul, thank you very much for your insights today and for joining us on BRR.
Thanks, Skye. Always a pleasure.